Alright, this is where we left off on our, before we could finish with number 53. I had these two journal entries up on the board, and that was the whole reason, was to explain, remember the notes. The rest of these notes all involved cash, and they were at the sale here was at book value, so there's nothing really tricky going on with these on this example. It will be on the future example, but this is kind of to introduce how some things can be a little trickier. So the journal entry, just to refresh, I sold equipment, brought in some cash, which I have up here in the journal entry. I got rid of the equipment for $25,000. If it was still worth 21 on my books and I brought in 20, that means I had a loss. So this was the journal entry, and then I asked myself the two questions. Did this journal affect net income? Yes. And in a different way, it affected cash. So even though I answered yes to both of them, they affect net income and cash are in two different regions, two different areas. So this one definitely does go on the statement of cash flows for these two areas in particular. And then this one, does it affect net income? No. Does it affect cash? Yes. So it's going to go on the statement of cash flows. So when I go back up here to the equipment, remember one thing we talked about that I'll re-emphasize here. We never look at these two numbers, and we never look at retained earnings when doing the statement of cash flows. I just want to mark them out. Retained earnings, that already gets calculated in other areas with net income and showing dividends. These two, the depreciation, I don't ever look for depreciation here. I always go to the income statement. I have it as the last item still showing here. I always want to use this number, 17,000, not this. I want to mark those out. And then if there's ever more than one item, like there is for the equipment, I want to list both of them separate. I want to say equipment, how much cash did I get when I sold it? I didn't get 25 that it was worth. I only brought in 20. And this one I did pay for the entire amount of cash. So some of it was on a note, like it will be on the next example. I wouldn't have put all 47, but I do put all 47 here, showing that I had a payment. Now I can begin to do the statement of cash flows. Everything has been updated with what I need. And so at this point, you should stop the video, do the statement of cash flows, and then hit play here in a few minutes, and you can check your work. Okay, looking at the statement of cash flows for this third example, we always start with our net income. And then we look for the two income statement items that never affect cash and that we need to adjust back to our net income. So depreciation, that lowers net income. That's an expense, so it lowers the net income. But in no way did it involve cash. So we need to pretend like this depreciation wasn't there and add it back to the 80. Same thing for the loss. On the journal entry, I discovered what the other was down at the bottom of the income statement. If you look at the bottom of number 3 income statement, it says other. Well, really, that was a loss. I just didn't want to tell you that right away. I need to add back that loss because a loss takes away from my net income, but I want to pretend like it's not there either. And then the rest of these are the more common ones that we've already done. These are our 3 current assets that have changed. Just as an example here, if accounts receivable goes down, that typically means I brought in money. AR going down, we would have debited cash as our most likely journal And then we have our current liabilities as well, showing here. If our current liabilities go down, typically that means we would have had to credit cash, and we lost money. And that's not showing up here in net income. Add up all of these, and we have net cash from operating is $108,000. Now where a little bit newer stuff comes in, investing. This one was the easier one because I sold the land. It tells us I sold it at book value. So the land went down by $15,000, and if I sold it for cash at book value, that means I brought in $15,000 cash. And then on this one, I want to look to my journal entry. I sold equipment, so I brought in the $20,000. Purchased equipment, I paid $47,000, so I listed. And if the item is a negative, as it is over there, $12,000 negative, used, net cash used by investing is our best option. The last thing, financing. I should have everything marked off on my balance sheet, all the current assets. All the long-term assets are marked off now. I've used them. The only thing left is the bonds amount. My bond amount went down. And if the bonds go down, that means I paid money. So I need to show that money was paid for those bonds. And then I have one note item left that I haven't taken care of, the dividends. So I like to mark everything off on the balance sheet as I use it, so I know exactly what I still have left to put on here. Again, this is a negative, so net cash used in the financing area. And now the summary of everything down here, the cash. I want to take my beginning cash, which was on the balance sheet, add up all of the yellow amounts. So I had the 108, negative 12, negative 116. You add all those up, you get negative 20,000. So 90 plus the negative 20,000 gives you 70,000, and that is what your balance sheet shows as your check figure. 70,000 is what the ending 2010 or whatever, 2011 I believe it is, number 3, answer 3. That is what your ending cash balance is. Okay. Ready? With this last example, we're going to have a lot more journal entries that we're going to need to do. But first thing, I always like to mark out the items that I'm definitely not using, so I know not to mistakenly record them in my answers. But then what I want to do is go down here to the notes. And we're going to need to journalize everything except dividends. We already know how to do dividends. But I want to journalize every one of these, and then as I'm journalizing, make updates on my balance sheet up here to help explain why did my building go up by $60,000? Well, I should be able to explain some of that. And equipment, what all happened here? So we're going to go down here to these guys. And let's do the first journal entry. Land was purchased with common stock. Okay, so I need to go back up and look at my land account. Land went up by $15,000. So my journal entry would obviously say, what did I get? Land, $15,000. And assuming I sold it for common stock, it doesn't tell me the specifics or what par is. So we'll just assume I sold it the stock at par as well. That would have been my journal entry. I sold land for common stock instead of not selling land. I bought land and I issued common stock instead of maybe paying cash. So I asked myself the two questions. We're going to have to do this on all of these as we go forward. Did this transaction involve net income? Well, we have an asset and an owner's equity, so no. And did it involve cash? Obviously no. If that's the case, this transaction, since I answered no to both of them, does not go on the statement of cash flows. So I'm going to mark it out. Mark out the land. Mark out the common stock, because it also went up $15,000. Well, I just explained where that $15,000 came from. It didn't come from cash, and it also didn't go to the net income. So I don't need to explain it in the statement of cash flows. Let's look at our next note. Added an extension to the building. Paid some of it in cash, the rest of it we put on a note. Okay, let's go back up to our building. Building went up $60,000. How did I get the building? I didn't pay all of it with cash. I only paid a very small amount with cash. The rest of it went to a note payable, as my explanation told me. So I asked myself the two questions now. Did this involve net income? Nope. No net income item here. Asset, asset, liability. Did it involve cash? Yes. So this does go on the statement of cash flows, but I'm not going to use $60,000 as my number because I didn't pay $60,000. So I'm not going to mark out all of the buildings. I'm just going to mark out this guy and instead put that I lost cash to remind me of $5,000. I'm going to use that I purchased building and the building only cost me $5,000. So now I've explained that 60. But also what I need to explain is this guy, the note payable. Of the $77,000, I just explained where 55 of it came from. And it didn't come from cash, it came from the purchase of a building. So over here, I don't want to use $77,000 and act like I got money for it all. I've explained now 55,000 of it. So I still have 22,000 that I don't know what happened to it yet. But hopefully we'll be able to see that when we get to the rest of the notes. So that one I'm still going to leave open for a little bit. I know that I'm not going to use 77, that's for sure. The next journal. Purchased a machine. So I got a machine or equipment for $47,000. Tells me how I got it, paid cash, and the rest of it went to the note, went on another note payable. Ask myself the two questions. Did this go on the statement? Did this go on the net income? Nothing here goes on net income. Asset, asset, liability. Did it affect cash? Yes. So this does go on the statement of cash flows. I now know where part of my equipment went. So this will be another item I mark out. And then I'm going to have 3 different items to help explain my equipment. This is the first one because I have 3 items in the equipment that happened. The first one I sold I bought equipment, but I didn't pay $47,000. I only paid $25,000. I know I'm not using that. Part of the equipment explanation was a payment of $25,000. back down to my notes. I threw out a machine, got nothing for it. It was on my books for $10,000 and it had a book value 2. Okay, so let's go over here and finish out the journal for the last 2. What did I get? You could put cash 0 if it helps, but I didn't get anything. So what did I get rid of in this case? I got rid of some of my accumulated appreciation for that piece of equipment. And I know if the book value is only $2,000 left, that means the accumulated was 8. I got rid of some equipment. And it told me that the equipment was worth 10. The rest was a loss on disposal. Now, does this journal entry affect net income? Yep. Loss goes on net income. Does it affect cash? No. So I definitely will need to know how this is affected. If we have a loss gain T account, right now I have on the loss side $2,000. And we'll come back to this T account in just a little bit. So my second spoke here, what happened with cash, because I'll get to the equipment, I'll put that back up here. Cash, well, nothing really happened. So there's my second spoke, I didn't get any cash or pay any cash. Now I can do that last journal entry. Sold a machine for $20,000. It tells me how much I brought in. And it originally cost me $30, so I can skip a few lines and do I got rid of equipment worth $30,000. If the book value is 17, that means I had accumulated depreciation of $13,000. That gives me my book value here. These two here equal $33,000 debit, only $30 in my credit. So my last entry here is a gain on disposal for $3,000. In my loss gain category, I have a final balance of $1,000. And if you notice on the income statement, I have another other category. And this one would have really said gain. And you can tell it was a gain because the net income before other was 73. After the other, it goes up to 74. And so this just confirms that, yep, we did have a gain. I now have enough information. If I go back up here, well, I forgot to update this one. Let's go back to this one real quick. I told us that the cash was involved, which was, I don't have it lined up really well. Line that up better, right there. $25,000, I have that there as a payment, but I forgot, and I can do this now. The other $22,000 that I was missing, it's now explained. I didn't get cash for that note. I got equipment. So I don't need to put that $22,000 on there either. All of it was explained with non-cash items. So none of the $77,000 goes on my statement of cash flows. Now we can start in and look at the operating section of the statement of cash flows. Standard procedure here, start with net income, add in our depreciation from the income statement. Remember, we had a gain also on the income statement. A gain adds to our net income, but we didn't really get extra money, so we need to act like that's not there. Take that gain back off. The rest of the 3 asset items are just like what we've done on previous examples. And then we need to include the liability, which is treated opposite of the assets. If assets go up, our cash goes down, but if liabilities go up, our cash goes up. Now the investing section, I had all of those items listed out on my balance sheet, so when I go to the building, I know not to put $60,000 because only 5 of it went to the building via cash. And I look at the equipment and I only had 2 items that involved cash. I had a payment when I purchased the equipment. This one didn't have any cash. And then I had some money coming in when I sold equipment of $20,000. The only thing left, if I'm looking at my balance sheet and I've marked everything out, the only thing left I have for financing is dividends. The common stock was already taken care of. I didn't have any bonds. The note payable was already explained. The only thing left was the dividends. Beginning cash, $70,000. Add up all of the yellows, all the totals. 72, those 2 added do equal my ending cash for the year of $142,000.